to the bank. When we work with our clients on dealing with the bank, we're not starting with the debt service coverage ratio. We're starting with where are we with the team, and what is the team's ability to assume responsibility. If we know that the team has the presence, the credit history, the ability to inspire and lead and make a lender feel confident that this individual is capable of repaying this loan in the future with money that we don't have yet, because that loan is going to be paid with money in the future. That's our goal, is this person capable of compelling that lender to do that? If they are, or we feel they're capable of getting to that point, then what we're doing is we're targeting how much down payment do we need in order for us to have the debt service coverage ratio that would be necessary to service whatever value we are trying to buy. And we model that out in various scenarios. And typically what we're doing is we're putting together a forecast of the company's future performance along with its past. And if it's not an incumbent lender, which in many cases we're working with the incumbent lender, because that's the organization that has the most history with this business, then we don't have to give them past financial information, because they've probably been getting it to meet lending requirements for their line of credit or any term loans that they have. But either way, what we're doing is we're putting together a financial package that illustrates the future and then what has happened in the past. We're doing some modeling to see how much debt can this thing support, what terms are going to be acceptable to the seller and still be within this debt service coverage ratio. And then we go to the lender and talk about our plan and ask them, what guidance do you have? And we try to get the lender involved as early as possible, because it's been our experience in these transitions that having the lender alongside us all the way through the transition, if we're going through a 3 or 7 year period, we want that lender in on meetings. And that on that 7-year transaction that I shared with you in that general contractor construction company, every year we had a meeting with the lender and the other advisors just to go through the plan to bring the lender into where the business was, how it had performed, how it's impacting the plan, which was involving this deferred bonus agreement that was going to help fund the buyout. Were we on track? Because the lender was looking at us creating a pool of cash that would be roughly 25% of the purchase price based on the terms that we had asked them for. And so we showed them our progress, and the progress was basically based on company performance. So the key to the banking side is twofold: have the financial ducks in order, have yourself a capable buyer who can sit in a meeting with the lender and develop a relationship and demonstrate to that lender their ability to lead the organization. And if you do that, then it's been our experience that the transaction is ultimately can be bankable. Now, I've not met any lenders yet that are willing to guarantee a loan, years in the future. There's no way we're going to get that, but at least we're increasing the likelihood that they understand what we're looking for and they feel good about the buyer, and they aren't as concerned about the buyer's ability to repay that note. So, in conclusion, if you're looking at transitioning out of your company, it's in your best interest. Think about what it is that you want to have happen. What would you like life to look like for you? And then engage with your financial advisor to confirm that what you want is understood by everybody, what that number is. Understand what your business value is so that you can see whether or not there's any deficiencies which might influence your timetable. And then look at your management team and ask the question, would I invest in these guys? Because that's what the banker or the third party buyer is going to be looking at. Is this management team capable of running that organization? If you do just that, then chances are you'll have a sense of confidence of what's possible. And then if you want to get beyond that, then you can call me. And you can reach me on my website at the McFarland Group. I got white papers and videos, and I shoot videos every week of business tips, which you can find on LinkedIn. Our firm has deep expertise in ownership succession and management compensation, and we would be happy to provide guidance and hope to hear from some of you someday.